In recent days, Singapore's real estate market has displayed a modest upward trajectory, marking the third consecutive quarter of rising house prices. This trend contrasts with the steady pattern observed in previous months, despite government cautions regarding high interest rates. Market demand continues to show resilience, propelling the uptick in house prices. Preliminary data released by the Urban Redevelopment Authority of Singapore on April 1 reveals a 1.5% increase in local private residential prices during the first quarter of this year compared to the previous 3 months. While this growth rate has decelerated from the 2.8% observed in the fourth quarter of 2023, it still signifies market activity. However, there has been a 20% decline in sales volume, indicating subtle shifts in the market's supply-demand dynamics. Su Chuan Chia, head of residential research at Jones Lang LaSalle in Singapore, suggests that the current data underscores the stability of underlying demand from local buyers. She opines that cooling measures are unlikely in the near term, as rising house prices are driven by genuine local demand. Singapore's property market has demonstrated notable resilience on a global scale, notably evading the severe property downturn experienced in various parts of the world. Despite facing challenges such as high interest rates and concerted government interventions aimed at preventing market overheating, local demand has remained robust and steadfast. However, concerns have arisen within the government regarding the impact of high interest rates on homebuyers' debt burdens. The Urban Redevelopment Authority (URA) has cautioned that domestic mortgage rates are expected to remain elevated compared to levels observed over the past decade. Morgan Stanley has forecasted a potential 3% decline in private residential prices in Singapore for the current year, citing the belief that residential values have reached a peak. Of particular concern are segments of the market, such as luxury apartments, which are facing mounting pressure. The imposition of a 60% stamp duty on foreign property purchases last year dealt a significant blow to this sector, leading developers to grapple with sluggish unit sales and resorting to offering discounts in a bid to stimulate demand. Responding to public apprehensions regarding housing affordability, the Singaporean government has taken proactive measures. In its latest annual budget, unlike some of its counterparts such as Hong Kong, the government refrained from introducing large-scale demand-stimulating initiatives. This cautious approach is especially noticeable in the Housing and Development Board (HDB) market, which constitutes the primary housing type for the majority of Singaporeans. Data for the first quarter has revealed an acceleration in the growth of second-hand HDB flat prices, indicating sustained market demand for this category of housing. Despite the recent favorable market performance, analysts express concerns that buying sentiment may be dampened by the influx of residential projects slated to enter the market this year. Consequently, the current surge in sales volume is anticipated to be short-lived. The Urban Redevelopment Authority (URA) is scheduled to release the final price change data on April 26, providing stakeholders with a clearer perspective on the trajectory of the Singapore real estate market.
Tune in every Monday to Friday at 8 p.m. for Qingxiao View, the Business Bridge.